Yeah. Yeah. I don't see many people here, but that's okay. Fine. I will just walk you through an annual report today. And if required, we will go ahead with the analysis as well as we go along in the next class and so on and so forth out there. I have taken the example of Maruti Udyog annual report. So in annual report, I have gone to the finance section out there. We could have done, the annual report has already been shared with you, and we have gone to the finance section out there. The finance section, as you see here, it gives you the profit and loss statement on the right and the balance sheet on the left. And the next page gives you what we call it as the cash flow statements out. All the three statements are basically covered in the class. Now, the first thing is what we see. This is a standalone statement. Couple of pages down the line, you also see what we call it as the consolidated statements out there. Consolidated balance sheet, consolidated profit and loss statements and everything. What is the difference between consolidated and standalone? Consolidated accumulates all, what do you call it, as the impacts of all their subsidiaries, holding and everything, and plug it together. It's a consolidated, the simple English word consolidated. So let's not even get into this as of now. Let us look at the standalone financial statement of the core company itself out there. Let us start from the balance sheet. I'm just going to look at the balance sheet out there. I'm not going to look at the profit and loss accounts as of now. I will look at the balance sheet out there. As you can see from my screen, I'm sharing. I hope, Suhail, my screen is being shared. You are able to see it?
Yes, Professor. Yes, Professor.
Yeah. So what we actually see here normally is you have the particulars. You have what is called as notes. In some cases, they call it notes. In some cases, they call it as schedules out there. And then you will have the statements for 2 years. That is the current financial year, which is ended, just ended, as well as the previous financial year. That is for comparison. Very rare case, companies also give 3-year financial statement, but normally all companies will have 2-year financial statements out. Now, what is it? Sir, we see assets, non-current assets, property, plant and equipment, and right to use assets, etc., out here. Now, I want to know the details of all of these. Let us not even get into that. Let us get into even a little more deeper into it. Let us get into equity and liability. Let us get into what is called equity share capital. Equity share capital, the company has put 1572 million rupees out there. 1572 million rupees is the share capital, equity capital. Do you know what is the face value of the share? Do you know how many shares are there? Are they issued or are floating around in the market, tradable in the market? All these details will be obtained if you go to what is called as the note number 13 or schedule number 13 as they've given here, page number 330. So when I go to page number, I go to the schedules or the notes out there, I get further details on each of these aspects out here. Let us look at one. Let us look at schedule number 13 out there, page number 330 in this particular case. I'm just moving the number of pages out here as I hope my screen is moving. And if you look at the page
Yes,
number 330, 27, okay, now I'm right here. Okay, page number 330. Now I see couple of things out here, issued, paid up, subscribed and everything. Authorized. Now what is all this? Let us try to understand this whole. Now authorized, that means the company is authorized to issue so many equity shares. That is 3751 followed by about 6 zeros. That is a number of equity shares of the value of 5 rupees each. It is eligible to issue, and it can issue to the extent of, if you multiply this by 5, you will get about 18,755. That is what is authorized. But the company, has they issued it? No, they have not issued it. The rest of it is not issued. They have not raised that capital out there. They can raise that capital. When will they raise the capital? They can raise that capital anytime in future, at some future date. So what is that they issued? Out of this 3751 followed by 6 zeros, number of shares, they've issued only 314, 402, 574 equity shares of 5 rupees each out there. They've issued only this one. That means the value of that is 1572 shares, 1572 out there. And the previous year it was 1510. That is where they've given. Previous year, this was the number of equity shares, and this year it has increased by so much. Does they mean that they issued more shares? No, they would have given what do you call it as stock options to the employees. Any share they issue will come from this basic bucket. This is a big tank. This is a big bucket. From this big bucket, they will take and keep issuing the share. Once they issue, then only it will be issued, subscribed, paid up, and that is what it comprises out there. And that is what is the value of 1572 is what you saw in that basic, in that standalone balance sheet out there. The balance sheet and P&L will not give you the details. The balance sheet and P&L will give you only the aggregated figures. You will have to go to the schedules to look at what is called as the, to obtain more and more detail out there. Now, there is also what we call, let us not get into this rights, preferences, reconciliation and all, because that could add to your confusions out there. Now, I'm just going to go into the next basic aspect. I'm just going to going back to page number, what do you call it as, page number, whatever, the original page number of your standalone balance sheet out there. We talked about equity capital. Next, there is something called as other equity. What is this other equity? What is this other equity out there? Now, again, let me look at page schedule number 14, page number 331. I will just look at that schedule number 14 out there, page number 331. If I basically look at that particular page, that will obviously be on the right side out here. If I sort of look at this particular page, what is this other equity? You can see. Sorry. The other equity is all these are the money that basically belongs to whom? Belongs to the equity holder. They are all called as other equity. Only thing is it is not part of equity. It is all the money belonging to the shareholders. Well, now what is happening? We say retained earnings. What I'm highlighting. That is the money that is retained by the company belonging to the shareholders. Profit that is retained by the company belonging to the shareholders out there for reinvestment. So retained earning, money belonging to the shareholder. Really reserve, what you see out here, share general reserve, share employee welfare fund, scientific research fund. All these are funds that I am creating out of the profits of the company. The profit belongs to the shareholder. From the profit, I am culling out some things and creating a reserve. It belongs to the shareholders out there. That is why these are all called as other equity out there. Some companies would call it under the head reserves and surplus. Some people, companies would mention it as other equity. That is just a nomenclature out there. Now, any questions at this stage? If there are no questions, I'm going to keep moving ahead.
So the authorized capital, the authorized one issue of shares, that will be a separate part, which is not part of the already issued, right? So
It
if
is
I
not
total,
authorized is the big umbrella. Whatever I issue will be part
hmm,
of authorized. Authorized is, let us take, authorized is 10,000 shares of $10,
hmm,
10 rupees each. Out of the authorized, I've issued 1,000 shares. That means I can still issue 9,000 more shares.
okay. So it's the minus.
It is
Okay,
minus,
minus.
right?
Okay,
That is what.
yeah, okay.
Okay, that is what it is. Now, this is what we talked about equity, the other equity part of it. Similarly, we can go to the liabilities part of it. Let's look at all these liabilities. Financial liabilities. What is the financial liability? If you see lease liabilities, provisions, other non-current liabilities out there. Non-current means long-term liabilities out there. Now let us look at the lease liability schedule number 35, provision schedule number 17, and then schedule number 19 is other non-current liabilities. We'll come to that as we go along in a few minutes from now. But now let us take up a little bit of assets. So what I'm trying to tell you now is, how do you read a balance sheet? That's all what I am giving you. How do you read an annual report? When you get an annual report, it comes like this. And how do you read an annual report? You have, for the details, you have to go to the schedules. That's all what I'm conveying as of now. I'm not even doing the analysis. Analysis comes later. I'll come back to this liabilities part of it. Now let us spend some time on equity. On assets. We looked at property, plant, and equipment. In property, plant, and equipment, it's about 174,314. Now, what is this property, plant, and equipment? I need to know what is this property, plant, and equipment. I am looking at note number 4, schedule number 4, page number 318. Write the next page out here. In this particular case, page number 318. 1 second. Yeah, 318. Let's move it a little faster. Page number 318 out here. Yeah, I got it out here. Now, if you see this, all these are constitute what we call it as the fixed assets out there. My freehold land is so much. My buildings, my railway siding. What is railway siding is because you have a railway, if you are shipping goods through railway wagons out there, because cars also get shipped through railway wagons, you have what is called as a line up to your factory, factory godown or yard or whatever it is. So that is what railway siding. Plant and machinery, electronic, data processing, furniture, fixtures, vehicles. Now, sir, do these things have depreciation? Yes, they do have depreciation. That is where you'll go down out here, the same schedule. You'll see this in this particular case. Balance as of 31, I mean, each one of the top one, it lists each one of these, freehold, land, vehicles, etc. Now, let us look at plant and machinery. Balance as of 31st March 2023, in this particular case, balance as of 31st March 2023 is 261,672 is the balance out. That is what was the value, original value, purchase value. I've made some additions during the year. I've sold some during the year. So that is what is disposals. And this is what is the net balance as of 2024. But now there is depreciation. Depreciation expenditure for the year. Depreciation expenditure for the year out there. Balance as of now. What is the accumulated depreciation so far? 163,278. Accumulated. Every year I'm accumulating depreciation. Depreciation for the current year, 23,012 is the what is called as adjustment. The depreciation for the year, current year is about 24,862 is what I am highlighting out there. That is the depreciation for the current year. So total gross depreciation on that particular asset is 204,611. What is the value of the plant and machinery? Original value, purchase value. This is the purchase value. What is the depreciation? This is the depreciation out here. You can see that more clearly out here in this part of it, this section. Now I have what is the plant and machinery in this particular case. I will say balance as of 23. Then additions, deletions, depreciation expenditure, and what is the net balance? 83,343 is the net balance out there. And basically, if you see this, it will have the same number in this particular case out here, in this particular case out there. That is plant, property, and equipment, 174,314. There is something we must have missed out. Let us just see that. Yeah. In this particular case, what we see out here, I mean, we looked at only the plant and machinery. There we are looking at there, what you see is aggregated, consolidated of all these three put together, all these put together, freehold, land, building, siding, everything. That is 174,314 is here. And that's exactly the number what you basically saw in this particular case out here in this particular case out here. So like this, right to use assets. Again, I can look at the schedule number 35. What is the right to use? I don't own the asset, but I have a right to use. I am got taken a 99-year lease on that particular asset. I have the right to use that particular asset out there. So again, what are the details? I can go to the schedule number 35 and then I can get the details out. Let us look at capital work in progress. What do you mean by capital work in progress? Capital work in progress, when I say, for example, I'm constructing a building or a factory shed. My factory at the end of the financial year is only semi-finished. It has all the walls but no roof. So what is happening? It is a factory. It is not an asset. Is it a building? No, it is not a building because it is not complete. It is a semi-finished building, semi-finished building. So when it is a semi-finished building, then I call it as a capital work that is in progress. That is a capital equipment that I'm getting, expenditure that I'm making, but that is only in progress as of now. Now, what are the details of it? I can go to schedule number 4.2, 321, schedule number 4.2 out here, schedule number 4.2 in this particular case. 331. 1 second. Yeah, 331. Yeah, 34. Okay, 31. I'll just move to the schedule page number 31. 28, 29, 30, and then I will have 31 out here on the right side. General require other resource, capital amalgamation, and what is the capital work in progress? 330. Yeah. Yeah, capital work in progress. 331 is what 4.2 out here in this particular case. I think I missed the page number. Suhail, I missed the page number. I think so. Let me just go back. 321. Sorry, I went to 331. That is my mistake. 321. I'm sorry. It's my mistake. 321.
Sorry, if you want, you can duplicate that tab. And so you can keep one tab as your financial statement. The other tab, you can go to notes.
Yeah, I can do. Let me just.
Yeah, sure.
The capital work in progress, you see out here, the entire details of capital work in progress. This is the one. And you see this projects in progress, temporarily suspended, less than 1 year, more than 3 years, and so on and so forth. And what are those projects? Building, plant and machinery, and so on and so forth out there. So you're able to see my screen?
Yes, Professor.
Yeah. So these are what we call it as the details of it. So these are basically what we call it as the details of the whole thing. So let us sort of go back in this particular case out here. Again, I can keep the tab as Suhail said. Can you, Suhail? Then you'll have to do it. You'll have to share the screen and do it. It's difficult. Anyway, no problem. I'll take care of it. Then there are intangible assets. Intangible assets under development, intangible assets. And then there is what is called as the financial letter. I'm going to go through all these schedules out there continuously. Go through all these schedules continuously out here. Intangible asset under development. Financial assets out there, loans and other financial assets. So 5, 6, 7, and 9 out there. Let us go through each of these schedules out here. Let us go through each of these schedules. 322 onwards, let's sort of look at these schedules out here. Am I communicating?
Yes, sir.
Okay. We see intangible assets. What is the intangible assets? Software. That is what it's doing. It just said intangible asset. What is an intangible asset? Is it a patent? No, it is only software. It is only lump sum and royalty that I paid out. So the details of it is what you will obtain. And why do I need the detail? Because details is what is required when you do the analysis. Details is what when you do the analysis. So intangible assets under development. What is the projects in progress? How many years you have spent on the project? Less than 1 year, more than 1 year, 2 to 3 years, and intangible assets under development, and so on. When we look at investments, again, investments are classified into non-current investments and current investments. What is current investment and non-current investment? Current investments are those investments which can be encashed within a year, which can be encashed quickly. And there are non-current investments. It says, for example, investment in equity instrument, subsidiary company, associate company, joint venture company, others. This is the amount out. Somebody will say, sir, I want to know which subsidiary company. I want to know which joint venture company. I want to know which associate company. Don't worry, you have the details. It has given 6.1, 6.2, and all these details are there. Investment in subsidiary, breakup, JJ Impacts, True Value, Suzuki Motor Gujarat. Now, investment in associate company, Bharat Associate, Bharat Seeds, Machino Plastics. And then what is called as unquoted investment. What is this unquoted investment? That means these stocks are not listed on a stock market. That is, the price of these things, stock price is not quoted in any market. Sir, then what is the value shown here? The value that is shown here is nothing but actually what do you call it as $10 into what is called 10 rupees into 225 lakh shares they would have multiplied. That is, it is shown only at the face value. That is, it is 25 million. 25 lakh shares into 10 rupees, 25 million out there. That's all. It is not quoted in the market. If it is quoted in the market, will it be shown at a price? At the market price? No. Even if it is quoted, it will not be shown at the market price. It will be shown at the price at which it is purchased, or the market price, whichever is lower. Let me repeat. It will be shown as, because conservative principle, it will be shown as the price at which it is purchased or the market price, whichever is lower. So same, you can see further thing. Joint ventures. What are the joint ventures? Where have they invested in joint? Now, again, joint ventures, associate companies, what is the percentage of holding? Details of significant investment. Where are they made the significant investment? What is the kind of significant investment? How much is the significant investment? All those details are all given. So what am I trying to again and again and again stress with all of you is how to read an annual report. Annual report, just looking at these two statements of P&L and balance sheet alone will not suffice. Now, I want to know if the company has invested more and more in associate companies or joint venture companies or unquoted investment. That means you have no hold. You don't even, if it is an unquoted investment, it's a private entity. If it is a private entity, the information of that particular company is never in the public domain. So you don't imagine an example. I start a company, public limited company. I go on investing in a private limited company. And you are all shareholders of my company. And when you are shareholders of the company, I have to give you a return. I'm not going to give you return. I'm just siphoning out the money to a private entity. And that company's financial data is not in the public domain. So basically, I can do that. So all these kind of details are required for analysis. How much money is going into unquoted? How much money is going into quoted? How much money is invested in associate companies, how much money is invested in ancillary companies, so on and so forth. This entire details what you will get out here. And there are other non-financial assets also. Let's go to non-financial assets out there, page number 328 in this particular case. What we call it as other financial assets out there in this particular case, what we sort of saw out here. And then what we call it as the other equity investments and so on. 1 minute, I'll just go to the page numbers. Hope I'm getting the right page. Intangible asset is of financial assets, investment loan, other financial assets. I'm sorry, it's other financial assets out there, page number 9. I'm in schedule number 9, page number 328. That's exactly what I saw there. Yeah. Other, what do you call it as other financial assets out here? What are the other financial assets? Financial asset carried at amortized cost, security deposit. And what is amortization? Let me explain what is amortization. I think I've explained it in the class, but let me again explain what is amortization. Imagine I place an ad I shoot an ad for 10 seconds. I spend about 10 crore rupees on shooting that ad for 10 seconds. But the benefit of that ad, what I've shot for 10 seconds, I can air it on TV for the next 3 years. Because I can air it on TV for the next 3 years out there, I can derive the benefit over a period of 3 years. The 10 crores what I spent, I can derive the benefit of it over 3 years. So what do? I divide the 10 crore expenditure into 3 parts out there and charge what is called it as one third of the 10 crore in this particular year. The other 2/3, which I have not charged as an expenditure, please keep the cash flow aside, which I have not charged as an expenditure, is what you call it as unamortized expenditure. It is an expenditure which I have not charged because I have not derived the benefit still. It's an unamortized expenditure sitting right there in my balance sheet out. The second year, I take one third more and write it as an expenditure. So what happens? One third of it is sitting right in my balance sheet as an unamortized expenditure, and it goes on. So what do you call it as some deposits, which are all amortized expenditures, it's here. Current financial assets, which are all due immediately in the next 1 year. Interest accrued, due, unsecured. Recoverable from related parties. That is, it's an asset, interest accrued. I have invested money, interest accrued. That fellow has not paid me, recovered. That is, it's an asset. Other goods, doubtful, less provisions out there. Then financial assets carried at fair value. That is currency, whatever, your currency hedging and other things out there. All these becomes financial assets. Sir, can I get even more granular details than this? Yes, you can get more granular details on this. There is no harm. You can get even more granular details. Next, I go to the other assets out there. Other assets are your inventory. What is the raw material inventory you have? What is the vehicle finished to work in process? What is the finished goods? What is the traded goods? And what is the loose tools? What is the stores and spares? And so on and so forth. All these details. Whereas if you go to the balance sheet out here, you will have only one word called as an inventory out there in that particular balance sheet out here. You can just see this. When you go to the assets out here, it will have only one word called as inventory, and this is the value of the inventory. That's all. What are these inventory? Are these finished goods inventory? Is it raw material inventory? Is it tools inventory? Is it traded goods inventory? What is traded goods inventory? Traded goods is I do not manufacture those goods. I only buy it and sell it out. I buy it from somebody and sell it. For example, I might import car from Suzuki, Japan, and sell it out here in the process. So these are trading. I can sell the spares. The spares are manufactured by my ancillary. I can take the spares and sell it out there. So these are all what we call it as a traded goods.
Sir, so the commodities market will also be covered here, or that's a separate topic?
Commodity markets will not be covered out here at all, madam. That is a
Okay.
separate topic. Commodity markets is purely in what do you call it as
Security.
your financial investment analysis.
Okay.
Right? That is not a part of this course. That is not part of this course at all. This is a
Yeah,
very
yeah.
basic fundamental course.
Yes.
Advanced course, yes. We'll have an investment management course where we will cover. I think. I think it's
So,
just
so
going to be recording.
basically here, since we are purchasing, it's a supply chain that is going to get followed. So that will all get tracked here, right?
Yeah. Supply chain will
Okay.
get. That is what I said. What is the?
Okay.
I mean, work in process. What do you call it as? How much is due? Because you will say in the inventories, I will have debtors also out here, other current assets and trade receivables and everything. So like that, you will have trade payables out here. You will have somewhere what you call it as payables out here. Payables will also be somewhere out here, hidden out here in this particular case, if I have to pay and for the purchase. So if the supply chain, what is the payment? What is the payment terms? What is the amount of inventory I'm holding in my control? Everything is accounted out here. Am I communicating, Pratibha? I'm just going to move ahead. We saw inventories. Then let's look at the other aspects out there. We saw investments, fine. We saw investments, current and this thing. And then there is something called as trade receivables out here. There is something called as trade receivables and cash equivalent, other bank balances, and so on and so forth. Let us look at those schedules out there. Let us look at 327. What we call this trade receivable, that is what we said. Loans will come to loans. Trade receivable, that is unsecured, most of these are considered good, but significant increase in creditors. That means these $24 million is due, but there is a significant increase in creditors. So I have created an allowance for doubtful debt for the $24 million. So my net receivable is only whatever is for 46,100, 46,013. That is all what is receivable out here. Trade receivable means I have sold, I have to receive. So trade receivable. Similarly, there are payables. There will be payables. When we look at the liability side, there will be payables. Now, similarly, there is what we call it as the loans, the current part of it. Advance to my employees, what I have given. It's an asset for me. What is advances I've given? To whom I've given? I've given to my employees. Different kinds of loan I would have given to my employees out there. So all that detail is what we will basically be seeing out here. In this case, of course, one can get into more and more details, granular details, as I said. Financial asset we saw, inventory we saw. Then I have what is called as my cash and bank balances. What is the amount of balances with the bank? What is the amount I'm keeping it in the deposits? Less than 3 months of original maturity period. What is the less than 3 months original maturity period? That is there, less than 3 months out there. The other bank balance, unclaimed dividend. I've declared dividend, but I am today. It's all what you call it as your NEFT and transfers out there. They just transfer directly. It is transferred to the bank. But imagine somebody has closed the bank account or changed the bank account and then not informed out there, or he has provided a wrong account number or whatever. Then the dividend, I am not depositing the dividend becomes unclaimed in the process. When it becomes unclaimed, I got to hold it for a certain amount of period, then I got to transfer it to RBI and so on and so forth. Out there is a rule for that. Let's not get into that. Then there are other assets. Other assets might be capital advances I would have given, some prepaid expenditures out there. These are all non-current advance assets out there, and there are current assets also. Same prepaid expenses can be current and non-current. Imagine I prepaid an expenditure for 3 years, non-current. Only the portion which is due for the current year, pertains to the current year, will become the current. The other 2 years will become non-current if I paid for 3 years. And only the portion which pertains to the current year will only become current, and the rest is all non-current out there. And that is what you basically see out here. I'm moving ahead as we go along. We talked about, now we move again to the liability side of the balance sheet. Equity share capital, we talked about it. We talked about other equity also, the general reserves and the reserves part of it. And then I am moving to the next basic aspect in this particular case out here. So even the retail, how has it moved? That all the details you will have here. That is, you can get as much granular detail as possible if you go through the schedule. Now, looking at the analysis independently of, without what we call it as if I'm looking at only the balance sheet and only the annual P&L and then doing the analysis, just does not help at all unless you get into this level of granular detail. So if if I have to move further in this particular case, the other two have left the call. Nagavina Talapalli, are you following? You want me to continue? You can type in the chat box if you want to. Any response?
Yeah, there is only one student.
Yeah, I mean, I'm not sure whether Nagavina Talapalli is listening to it. It's making sense for you. Can you please respond if you're there, either by chat box or by voice? You also left, I say. Sohel.
Oh,
Sohel,
he also
he also
left, right?
left. So fine. That's all. We don't care. Why should I
Yeah.
bother?
I think it's getting recorded, sir. Yeah.
That's okay. Let it
Yeah.
get recorded. If they're not interested, I'm not interested.
So I thought a lot of people join, like, since we are discussing annual report.
That's okay. No problem. Anyway, maybe they are aware of it. It's okay.
Yeah.
That's okay. That is perfectly all right. If they're not interested, not a
Yeah.
problem.
Yeah.
Let us wait till 8 o'clock and then close it.
Yeah, sure.
I don't think it's getting recorded.
Oh, I think it's live, sir. It's going live on YouTube also.
Oh,
Yeah.
okay. I think you're back because suddenly I saw people leaving, so I just stopped it. We'll continue with that.
No, my network got dropped.
Yeah, I anticipated so. That is what, not an issue at all. Not an issue. Because suddenly everybody had dropped off. So I was not very sure whether we are going to continue it. No problem. We are just going to continue the whole thing. 1 second. I'm just going to do it out here. We again started off on this, and then we are at page number. I'll just again start sharing it. No problem. I can share it. No issues out here. So if you actually see in this particular other equities and other things we have basically seen out here. So what we are looking at in this particular case is the just standalone, what do you call it as this balance sheet, what we normally talk about out here in this particular case may not make much sense unless you get into the details of it, granular details. Now, can I get the granular details? Yes, you can get the granular details. Now, what is the use of these granular details? That is what we will learn when we start working on the financial analysis part of it. So, the same way is P&L also, the profit and loss statement. Are there some details? Yes, there are details. For example, let us look at revenue from operations or the other income. These two, let us look at schedule number 22 and schedule number 23 out. If I go to schedule number 22 and 23, out here 337 and 338 page number, and 337 out here, if I basically sort of look at in this particular case, revenue from operations, what is the revenue that I've got from this vehicle sales? What is the revenue that I've got from the sale of spares, etc.? What is the revenue that I've got from income, other operating revenues? What is the income that I've got from services? What is the income from scrap sale? What is the income from freight and service charge? What is the rental income? What is other income? How much I've got? You can actually see that. We also look at other income out here. That is what we saw. When we say other income, these are all what we call it as non-operating, nothing to do with my operation. So, for example, as you see, bank deposits, I've earned interest. Income tax refund, I've got. Advance, I've received from vendors. Dividend income on all my investments, I've got. Others, net gain from sale of debt fund, mutual fund, and so on and so forth. I basically obtain all this. So, what does it say? It gives me the details of all other income that I have. So, similar is expenditure. Let's go back, let's continue with this itself as we go along in this particular. Material consumed. What is the amount of raw material that I've consumed? How much is purchased? How much is still there at the end of the year? How much have I consumed out there? Is what we see out here in this case. What is the kind of inventory I had? What is the work in process inventory I had? What is the kind of raw material inventory I had? What is the closing balances of all this inventory? Work in process inventory, finished goods inventory, traded goods inventory. All these details you will basically see and you will be able to get out here. Now, on the expenditure side, we also have employee benefits and expenditure. How much am I paying as salaries and wages? What is the contribution to their provident fund? What is the contribution to their welfare fund? How much am I doing? This is all basically what happens is all these are forming what we call it as the details out here in this case. What is the finance cost? What is the overdraft cost? What is the deposit to dealers? How much have I basically incurred? All these. So what am I trying to do out here? We are getting into the other granular expenditures out there. Other expenditure, how much is stores, how much is rent, how much is repair to buildings, others, and so on and so forth in this whole thing. You will actually see this entire, all these details of all these, further details of all this. Now, how is it used? Yes, it is going to be used when we analyze the case. When we analyze the balance sheet and P&L and balance sheet, we will use all these aspects for our analysis. When we say analysis, we are going to look at what is the amount of money that, what is the percentage of other expenditures as regard to my revenue. Simple. Let us look at. Let's take a simple example. There is an employee cost out there. My employee cost is 54,784 is my total employee cost. Out of that, wages is 48,082 is my wages. What is my total revenue? These expenses, salaries and wages or employee cost form what percentage of my total revenue? I can calculate this. So that is that an analysis? Yes, that is an analysis. Why that is an analysis? Because I need to know what is the percentage of money that is going in for my employees and staff. What is the percentage of money that is going in for raw materials out here? What is the percentage of money that is going in for my finance cost out there? Because if I borrow more, my finance cost is high. If my finance cost is high, then what happens? My profit is going to be low and so on. So what are we trying to do? We are going to use all this information. That is what I'm going to do it in the next live session, whenever we are going to schedule it out there, most probably in 2 weeks from now. We are going to use that level of information for analysis. All these aspects that are there in P&L, you will find the details of it in the schedules that is given out there. Schedules or notes. Some people call it schedule. Some places they call it notes out there. Notes to account. Some places they call it schedules out there. So the idea here is to ensure that you can get granular details of all because the balance sheet and the P&L, what you see is only a consolidated statement out. And analysis, you will hardly figure out anything from the consolidated statement out there unless you get into the granular details. And these the idea of this session was how to read an annual report. That's all what we are talking about. In the next session, we will analyze this. We will build some ratios out there. I have built some ratios using an Excel sheet. I will take out that Excel sheet and then basically sort of discuss that Excel sheet ratios out there, which I have also covered it as part of the course out there. So the idea is unless you learn how to read an annual report, you will not be able to analyze, because what you analyze will be at the gross aggregate level. You will have to get into the granular level for analysis. So that is the idea, is basically to learn to read an annual report out there. Now, any questions, Pratibha?
Yes, sir. I mean, maybe this is out of this context
No
again.
problem.
The thing is, for every industry you mentioned, there's a recommended. I mean, whenever we are going to do analysis, right, to say it is a good or a bad, or to analyze any outcome out of it, are there any recommended standard considerations for every industry?
Yes, there are some recommended ranges for every industry. It is not one single number. You might find that in a textbook, but normally a recommended ranges for an industry out there. For example, if we are looking at the kind of trade receivables, what is the general accepted practice for trade receivables? There are recommended what is called as ranges, but this can also change with the situation. This can also change with the season. For example, seasonal industry. Let us look at, I'll take an simple example, tire industry. If you look at, normally what happens, there is a percentage of raw material that they will basically stock. That is a standard for tire industry. But if you look at winter, October, November, December, the prices of natural rubber will be depressed, and they will tend to stock more during that period out there because their prices are depressed. They'll try to buy more and stock a little more out there. So what happens? There is a range that also varies with the season in this particular case out there, as you can see. So, but
Okay. Hmm.
not what you call it is not etched in stone, but there are some accepted ranges for each industry. There is no one single number that you would find in a textbook, but in today's context, that is all not there.
Yeah, because also with the robo advisors and the AI in place, this numbers will again shift, right, as per the analysis.
Of course, for
Yeah, yeah.
example, imagine there is an automobile company. One automobile company basically has all their ancillaries right around them. So they will follow just in time, like Maruti.
Yeah,
Maruti.
okay. Hmm.
Another company basically imports the raw material wherever, it can be wherever. They will have to maintain inventory.
Yeah, yeah,
So what
agree.
happens in this context is specific in that case.
Okay. And also, as per the sentiments, and we discussed like for the housing industry, right? All the other sectors get dependent on that particular infrastructure or the inflation or whatever the economic parameters are, right? So even in those days, but they are not dependent on seasons, right? I mean, there will be a 5 year or a 3 year plan maybe for
There
them.
is a cycle. There is not a season. There will always
Yeah.
be a cycle. For
So every
example, cement
industry have a,
industry, steel
yeah.
industry, real
Mm-hmm.
estate. There are always cycles out there.
So are there any standard cycles or a range of cycles like we know
Normally,
the
if you look
curve
at the
goes?
cement or steel, it is normally they say 10 years is a cycle. Normally.
Okay.
There
So
is
is
again, it is all
mm-hmm.
based on the history. They believe that normally 10 years is a cycle for a cement industry or a steel industry out there.
Okay.
So what happens is everybody reaches full capacity,
Hmm.
operates 100% or 110% capacity. They all go in for augmenting the capacity. When you're augmenting the capacity, you cannot increase by one number or two numbers. You have to increase by a substantial volume. So then at some stage, they're all in excess capacity. And over a period of time, demand picks up and they all reach the full capacity out there. So that is how these
Okay.
industries operate.
So is there any place we can read about this cycles of different industries?
Industry reports, ma'am. There are each
Oh,
industry has a report. Value
okay.
Research,
Mm-hmm.
ICRA, Moody's, they all publish these kind of reports out, the industry reports out there.
Mm-hmm.
So pick up some of the industry reports and start reading it. If
Okay.
you want to read about any industry,
Yeah.
when we analyze a particular industry, normally it's a good practice to read that industry report.
Okay. And another question, like for example, PNG, right?
Mm.
They have a lot of other products and they invest in a lot of different sectors,
Mm.
right? So to identify that, we won't get it in annual report, or we get those information also in
You will
annual
get that
report.
information in the annual report. Some financials, in the financials, you'll get some. In non-financial information, you'll get most of the details in the annual report. So what
Okay.
happens is most of these, I will also listen to, you'll go to their website and there
Mm-hmm.
is the investor relations tab. In that, there
Mm-hmm.
will always be analyst call. They'll either put a transcribe of the call or there'll be a recording of the call itself that will be there. So listen to that investor's call. You'll get more information about the
So
company.
they are generally that conference calls, con calls that happen for the
Yes,
reports. The
with
same thing.
even some of the analysts out there. Some of the analysts keep a con call with them. So
Okay.
those calls are transcribed and put, or actually are the recordings are put. They also give you a sufficient amount of information.
Okay. Okay. So the process is basically you go through the annual report first, and then you
You go through the annual
attend the
report, you'll
industry
get an
report.
idea, then you
Hmm.
form your questions, then you look at the industry report,
Okay.
and then correlate both. You will be able to see. Then you have the questions that come in.
Okay, fine.
It's a long process.
Yes, yes. But sir, if these, as you mentioned, that generally if you're in a long term investor, right, or you are already analyzing it, so there must be some numbers which analysts might be, it might be easily available, right? That cement has this cycle or
This
this
will
cycle.
again vary with industry to industry, sector, timing in the market, all these things. These numbers are not very standardized. And one particular analyst will have, each analyst will also, the numbers, what they look at might
Will
not
vary.
be likely.
Okay. Okay. Yeah, so that's it. I mean, I had those questions. Yeah.
Thank you.
Thank you.
Sure. I think Suhail will inform about the next session where we'll take up some bit of analysis. Okay.
Sure. Yeah. Yeah.
Thank you.
Thank you.
May I know
Thank you
what
so much.
Thank
you're
you.
pursuing your studies, or you're working, or
No,
may I
no.
know?
I work with an IT industry. Yeah.
Okay.
Yeah. So with like around 14 plus years of experience.
Oh, okay. Fantastic.
Yes. So all of a sudden I realized that this is one thing I have never thought about.
Okay. Okay, ma'am. So your background is engineering?
Yes. Correct.
Okay. Fine.
Yes.
Thank you.
I'm not
Thank
sure
you.
if this is going to webcast, otherwise I would given my company name.
No, you don't. I
Yeah.
don't
Yeah.
need the comment. I just want to know
Sure. Yeah.
sector. That's all. I'm
Yeah.
sorry.
Yeah. Banking
It's going
sector.
live on
Yeah.
YouTube, I believe. So
Yeah. Yeah.
that's
Banking
fine.
sector. Yeah.
That's
Thank.
perfectly all right. Thank you very
Yeah.
much. Thank you.
Thank you so much. Yeah.
Thank you. Suhail, that's it. We'll close the
Yeah,
session today.
sure.
Okay.
Thank you, Professor.
Thank you. Thank you.